Good day to everyone who are on the call today. This video is giving a simple but effective information with respect to ITC on promotional goods. This is a highly disputable area in the GST law presently and also was in the previous regime. A short video is being created on various such topics to be able to understand on a simple basis for all the taxpayers who may not be very knowledgeable in the area of GST. So first and foremost, what are promotional goods and how are they considered to be liable under GST? If we take a scenario where combi goods, wherein buy one get one free offers are being provided, and the sale price of these goods are included in the other in the main goods value. These are the situations where promotional goods are provided on certain conditions. One such condition would be where you need to purchase above a certain specific limit. Say first you need to purchase for a value of 14,000, then you will be able to get one free product. The other type of all these type of transactions is the simple fact that it brings in a concept of minimum amount which is required to be sold, and the requirement is on pushing my sales and pushing my turnover. During this activity, what arises is that output GST also increases as my turnover is increasing. So whether these goods qualify as gifts. So since these combi offers and promotional goods lead to an increase in my sales and my payment of GST, the products should not be considered to be gifts. This is also supported by what the gift is defined to be, which is a voluntary transfer of property by one person to another without any consideration or compensation thereof. In Blacklaw's dictionary, also a voluntary transfer of personal property without consideration. In the Supreme Court decision of Sonia Bhatia, the definition of gift was specifically provided in the Corpus Juris on volume 38 in this case, which also can be studied. So the sum and substance is that something that is given on a voluntary basis without consideration, without any expectation from another person. In these situations where goods are given on a promotional basis, there is always an expectation. First and foremost, there's a condition to the to obtaining that gift, and another thing is generally the cost of these gifts would be included in the other product. So wherever the goods are alleged to be given free are not available to the persons who have not purchased anything. This is a simple concept to drive home the fact that it should not be considered as a gift, because of the fact that when I give something as a free product, in that situation, it cannot have any conditions, restrictions to obtain such free product. So in these situations, considering them as gifts should not be allowed. The reason why I am harping on the concept of gift so much is that the GST department is disputing the credit eligibility on the simple fact that these are gifts which are covered under section 17(5)(h), and the ITC is restricted and therefore should be a cost to the company and the credit should not be claimed. Further, these goods which are mentioned as free are not given free of cost. So this is something where the terminology is very significantly different, but having a very important difference, which is there is a cost which the customer is bearing on these free goods. Even though it may be mentioned as free, the cost of these goods would generally be included in the cost of the main goods. This is one of the simple and effective strategies of most of the companies worldwide. So once the fact that we understand that these are not free goods and the cost is included, we can come to a conclusion that these goods have suffered GST, and once GST has been paid on these goods, there should not be any restriction on the ITC. This is also supported by a CBIC circular under GST 92/2019, wherein the concept of buy one get one free was discussed, and unless it is supplied and it's considered under the schedule 1 of the said act, conditional to that, these supplies would not be said to be covered as a supply, and also would not be said to be a situation where the ITC would need to be reversed. They are assuming that these cost of the goods would be included in the single price that is charged from the customer. Please note, in Schedule 1, Clause 1, there is a requirement that the IGST or the CGST, SGST, which is claimed against the goods which are purchased, have to be reversed even if there is no consideration. But they use a term as business assets, which is not defined in the GST law. So assets, if you see, would generally be on the side of the balance sheet. Promotional goods ideally fall under the profit and loss side of it, wherein it would fall under the expenses head and would not be capitalized into the assets either as inventory or capital goods. So in these situations, I feel Schedule 1, Clause 1 would not apply. And as it is not a gift, Section 17(5) does not apply. So once both of these are not applicable, the credit should be eligible. And having this departmental circular is very helpful because these circulars are binding on its officers but not on the taxpayers. So coming to one simple concept of other business promotion expenses, which is a situation where certain goods are having the company name, company logo, which are given to vendors, customers, employees without any charge. All of this has a business sense to it. The requirement to provide these goods to these persons is improving my business visibility, is improving my business reach, and is also giving a sense of ownership to these people. One of the biggest marketing strategies is just the repetition of the name of the entity. If you see majority of the advertisements, they repeat the name at least 20 times in a span of 30 seconds. And what happens is that the person remembers the name. Similarly, if you keep seeing a company logo everywhere on your book, on your pen, on your watch, on your water bottle, on your bag, you will start remembering this name. And if you see more of this, automatically, when the need arises for that goods or for that service of that entity, I will automatically, subconsciously move towards that entity. And that improves my sales, improves my turnover. So in this effect, it is very simple that to prove that this is having a business link, and once nexus to business is considered and there is no specific restriction under the ITC reversals, the ITC should be eligible. Although the advance rulings are not applicable to all, it is applicable only to the person who is applied under the advance ruling and the jurisdictional officer. This concept can be understood from this Telangana state, Tamil Nadu state advance ruling, which was also agreed by the appellate authority of the advance ruling, where ITC was allowed against this, was disallowed against this rewards given on achieving sales. There are many rulings wherein the credits also are allowed, but each and every situation needs to be considered separately. Department is disputing such ITC, so taxpayers' risk appetite must be clear when they are taking such decision to reclaim such credits. Alternatively, where the taxpayer is conservative in nature, considering it as a cost included in the price that you charge to your customer, and of course that would reduce your business edge, but it would be a conservative view which would not bring in more departmental notices or demands. So with this, we have come to the end of the short video on ITC on promotional goods. I hope this video was useful and knowledgeable to the persons who listened to it. I would like to thank you for your patience and your time.